Welcome to the Crypto Layer HQ. We just had our February monthly close, and that marks the fifth red candle in a row. The last time we had 5 red candles or more in a row was back in August 2018 when it started. We had 1, 2, 3, 4, 5, 6. And this time we had 1, 2, 3, 4, 5 red months. All of Q4 was red, and so far all of Q1 has been red. And if March is red as well, that will mark 6 monthly red candles, which will be the most amount of monthly red candles we have had. Similarly, we had back in the 2018 bear market, which means that if we end up getting another red month candle, it could be possible that we end up getting a 7th red month, which would mark the longest streak of red months in a row. Now, that's not my base case. I think we've already had 5 red months in a row. There is a good chance that we end up getting a green March, since if we look back in the bear market in 2022, March was red after having some considerable weakness in Q4. We did eventually start to consolidate, and February was green, but March was also green, and that marked the top. So of course February has been red, and the strength we had in February March might just be slightly delayed, resulting in some strength in March. But let's see how things pan out, since we obviously could definitely have another red month, which would be very interesting because that would mean we had the same amount of red months as back in the 2018 bear market. And the last time we had 5 red months in a row was actually back in the 2011 bear market, where we had 1, 2, 3, 4, 5 red months in a row. So I do think once we start having an extended amount of red months in a row, that does start to indicate that there is a good chance that we eventually get a green month, since it is unlikely that you just continuously have red months in a row, which would make sense, since if we do look at this level back in 2014, we can see that this was a level that we did consolidate quite a bit. We did have many monthly wicks, but we did end up holding at the 59k region, and the monthly candles mostly closed above it or just held at it. And we can see we pretty much almost wicked to it in February, so potentially in March maybe we could end up wicking to it and maybe even holding, and then it might end up being in April where we do end up getting some strength. But I do think this is a major level, and there is a good chance we end up getting some sort of bounce into the end of Q1 of 2026, since we did hold such a long time back in 2024. There is a good chance that we end up potentially consolidating. Maybe we hold on this level, potentially this month or next month could be green, and then potentially something like this, and then we eventually break below in later this year going into summer potentially. So it is interesting every time we get a monthly close, since it does show how much weakness we have had in the market so far. Many people were bullish for Q4 of 2025, since that's usually when we get a lot of strength, but this cycle it did catch a lot of people off guard, since we just had 3 consecutive red months in Q4 of 2025, which a lot of people weren't expecting, and that redness has continued. So March, February, definitely going to be interesting to see if we get some strength, but my base case remains that that strength will eventually be rejected and we will continue to have some weakness into late 2026. Now, some other interesting things to note is that when we had some strength back in the 2022 bear market, when February and March were green months after some weakness, we then did follow up with some very aggressive weakness the following months in April, May, and June. So we might end up getting something similar to that, where we do end up getting, let's say, a green March or maybe a green April, followed by potentially continuation of aggressive weakness going into summer, which would be going into potentially June, July, even May. So definitely keep an eye on that, and don't be someone who eventually buys every bit of strength they see in a bear market and have a plan. It's better to be buying weakness, and ideally weakness we have later in the year.